All right, let's shift gears to the
Okay.
last part of the show. What have you got, mate? You've got the next bank to fail. Who do you think it's going to be? Have you got something for us?
I certainly do. Okay, so as you all know, we've had a pretty rough time in the banking industry around in certain banks. And did I manage to get it? No, it didn't load. That's right. I'm going to do a screen share. All right, so I'm going to give you my prediction for the next bank to fail. And here we go. I'll just jump right into it. All right, so here we go. PacWest Bancorp. Yesterday it was down over 20%, about 28%. Having a little. Let me refresh it because the market is closed now. Let's see how it ended on the day. Oh, down another 13. Oh, look at that. And seeing the aftermarket here, it's down another $1.72. It's down to $4.70. Holy cow.
Now, it's high of nearly $30.
Yeah. And so let's go back 3 months and let's take a look. Okay. And now,
look at that gap.
Look at this. Yep, there you go. Now, so this stock was around $28 back in mid-March. And by the way, I wonder what event this represented. I wonder what that could be. And so
what's the date?
Well, March. What is it? March. It looks like March 15-ish. Anyway, this was the SVB calamity.
Yeah.
Right? All right. So it went down and simply now, and then it settled into this nice long channel. Now, I won't get into technical analysis about this, but this is a slam dunk short.
The double bottom there.
Yeah. Well, you had a nice long narrow channel there, broke below the channel, and then puke. Boom. Now, channels. Okay, I didn't mean to do this, but as long as we're on the topic, from a technical analysis point of view, channels are very powerful. And the rule is the longer the channel and the narrower the channel, the bigger the move will be when it does finally break the channel. Now, in this case, it broke to the downside, right? Because what channels represent is kind of a staring contest between the buyers and the sellers. And you had a big move down, and then it settled into a staring contest. Now, as the channel goes on, the odds are that when this channel breaks, it's going to break to the downside. Why? Because the move leading into the channel was to the downside. That's just
hang on. There's no reason for it to break to the upside. You're overcomplicating it. It's not going back up to $28, man.
I was making. You
were being technical to the downside and down again.
I was just giving you a little lesson on technical analysis. Now this company. While I'm here, I'm going to come back to this in a second, but let's look at a few other bank stocks while we're here. See, what else can we look at? Let's look at Wells Fargo. How's that looking? You'll be impressed how I know all these symbols off the top of my head because I've been doing this so long. Okay, Wells Fargo also looking like crap, and it's rolling over. Now, what's another one? Let's look at Bank of America. Nope, what did it be? Oh, what's about that guy? Well, let's take a look at JP Morgan. Here it is.
Look at the gap up there as well.
Yeah. Now this is you see, JP Morgan is unique because it is considered a beneficiary to other banks' failures, right? But remember the big move this day here. This is on the news that they got that sweetheart deal from the First Republic, and look, they're giving it all back, and they're right down. This is not a good sign, guys. And
that's
you have
the sugar high there that you were talking about, right?
There you go. And look at this gap here. You know the rule about gaps there, right?
Oh yeah. Yeah, that's going to be covered on the downside on the way back down. Yeah.
Now, if you think of JP Morgan as the strongest, as the bellwether in the group, and it's considered the strongest representation of the group, and it's looking like that, imagine what the weak stocks are going to do. So this is not a good sign for the banking industry. And as the banking industry goes, so does the market, by the way. Let's look at.
So when you look at the original chart there, you're saying PacWest is the next one to go, or it potentially could be. The setup is there for that to almost go away, or certainly to be decimated. when we look at something like that, do you see an opportunity to get yourself short in those trades?
Oh, okay. Good question. Let me cover this guy real quick, and then I'll answer that question. Here's another bank, U.S. Bank. This is actually my bank, U.S. Bank Corp. And again, yeah, the channel.
And it's
so
broken to
also
the downside
and
again.
It's going
Same
and,
thing.
and it's heading down too. So and
If you overlaid those, that PacWest one and that one and maybe half a dozen others, they'll all be doing the same behavior, isn't it?
That's right. And that's kind of my point. Now, if you look at an ETF of the banking industry. Now, this is the FAS. All right. So this is
almost the same thing.
There you go. There you go. Right. The pattern's looking the same. And if you wanted to make money on the sell-off of these guys, one way to do it is this guy, FAZ, which is that I did options on these back here, right? I told you about that, how I did call options on this guy. So this is the inverse, right? This chart. So this ETF is a short ETF it's a bear ETF on the banking industry. So as the banks go down, this guy goes up. So if you want an easy way to make money off of the banks selling off, you guys can just buy this guy if you want. I'm not telling you to do it, not financial advice, just one friend to
another.
Just
saying.
Just sharing an idea.
Saying that's what I did.
Yeah. And okay, so let's go back to PacWest. Okay, so well, my point on this, no, I wouldn't be shorting this guy now because it's too late to short it. I mean,
what about some put options?
Yeah, there you go. I do put options on the guy, but the thing, well, I don't know though. The time to do options on this guy was back here, because as soon as it breaks, the premium on those options are going to pop.
And you're not yet don't have much downside to move to. We've gone all the way down to $5.50 or $6, whatever it is there.
Yeah.
And then there's not much, well, $6.40. Yeah. There's not much room to go. If we were up at, $25 and it broke to the downside, then yeah, sure.
Yeah. The time to short it or do put options on it was back here, and there were signs there to sell, because
if
you go back six months. That was now the real trigger is really this guy here. But if you look closely in here, they put in a descending triangle, right? It went up, came down, had a little rally. So the real trigger is right there. So if someone were paying attention, you did have time to short this guy or do put options.
And look at that in just 3 days. 1, 2, 3.
Yeah.
Just that you said it yesterday on the show that this stuff happens really quickly, and it happens almost so fast you don't know what to do. Because if you look at the crash there that happened in 3 big candlesticks like that over 3 days, the first day you'd go, "What's happening with the bank? What do you mean I should get my money out of the bank?" Then you go to the bank and say, "Can I have my $400,000?" And they go, "No, you can't. You can't have your money." And I try and transfer my money, and they go, no, you can't transfer your money either. And now you're stuck. And that's, to your point, that's why you've got to follow that mantra. You've got to reduce. You don't have to get your money out of the bank. You've just got to reduce your exposure to the bank. And that can be a variety of different ways. That could be spreading your money around across a number of different banks, so you're not actually exposed to one. Because if you had $500,000 in that bank account there and the price pulled away like that, man, you'd be nervous, huh?
Yeah. Now all these bank stocks are looking the same. The patterns are, you can overlay them and they all look the same. So why do I think this one is going to be the next one? This one has particular exposure to the commercial real estate industry. And we've talked about this before, how I think one of the biggest untold stories about this banking crisis is the real underlying problem. One of the biggest underlying issues is commercial real estate. And
well, hang on. I'll just qualify that a bit more and say the biggest underlying issue is vacant offices and their leases now being expired after COVID. I'm not renewing that lease. I'm not going back. My workforce is now dispensed. I'm not carrying that overhead anymore. Go into the city right now here in Sydney, and you'd be forgiven for thinking like something was wrong.
Yeah.
Like it's a bit busy, but then you kind of walk around and go, like if I walk around today on a Thursday in downtown Sydney, I'd be like, there's no people here. Where is everybody? Like, what's going on? And it's not that there's no people; they're just all working from home.
Yeah, Minnesota happens to be headquarters to a lot of Fortune 500 companies. We have 3M, we have Medtronic, we have Hormel, we have a lot, and we have Target, we have General Motors and General Mills. If you like to eat cereal out there, but if you go to any one of the corporate offices, they are empty now. They're the people are working from home. People, the manager said, you know what, we can save money, but we'll just have people work at home. We didn't, and I think that's going to be a new trend. It's here with us. So we have a glut now out there of vacant, commercial real estate buildings, and that's a real issue. A lot of these banks now. So this bank, PacWest, happens to cater to commercial real estate developers. So they have a lot of this paper on their books. That's why I think they're particularly exposed to what's going on in the banking industry right now. And but like we said before, all these companies, they report their financials quarterly, right? So every quarter is when we get a chance to see what's actually going on. Well, we just finished one quarter. So this fall is we're going to get a next good look at these banks' financials, and I think that's probably when the real big event is going to happen, and we're going to see probably hundreds of banks going under. Hundreds.
Man. You heard it first here, folks, on the unspoken truth that this banking system